Hello, Jim here. Selling options is a great way to make some extra income every month. Today, I want to share with you what I think is probably the easiest and most repeatable way to do it, and that's with the wheel strategy. I've been running a particular wheel strategy on small accounts, 10,000 or less. I'm going to share with you my success with that, how I actually do the setup, and how much money this account is making. I think you might be a little bit shocked at how much you can make with such little work. So stay tuned. I think it's going to be well worth your while. Okay, I've opened up my option wheel strategies worksheet and I have it on the first tab. This is what I call my 10K conservative wheel strategy. So if you have a $10,000 account, this strategy would work out really well. Now you could actually do it with a much smaller account. You could potentially do it with a 5,000 or maybe even a $2,500 account. Again, by how many trades you make, how many contracts you use. So I started this back in January, and at first I did hymns and Fiverr. Fiverr I've stuck with this whole time. It's worked out really well. It has not been assigned to me. Hymns worked out fairly well. It did shoot up, so it got too expensive, but I traded those two in January, made over $300. You can see here the different put premium. I also stuck with fairly low deltas around 20, 24, and 21. And these were fairly profitable trades since they were cash secured puts. I mean, 118 is pretty substantial for a cash secured put. So that was January. February, I switched. HIMS had shot through the roof. So I used KINS, KINS, which also later shot through the roof. So both of these expired. Every time they expire, I will highlight them in blue. But I was able to trade Fiverr again in February, and then Kens worked out really well. I made 291 and 175 between the two different trades. The Kens was really profitable, nearly 400% for the amount of time I actually the DTE or the number of days I had it open. So it worked out really well. Then in March, I switched again. Ken's shot through the roof, and I felt like it was too pricey. So then I used American Airlines, who also has really good premium and volume. And I did a vertical put credit spread for it. Now, you could have done this without a vertical put credit spread. Um, I just chose to do it. It would still work out in this account if you did only a cash secured put. You would only need 4,335 minus the premium that I brought in. But it was a four contracts, $2 spread, which was unbelievable that I could get such a small spread. And I did make $164.38 with that. And now I've stuck with American Airlines. So I rolled again, picked up another 177 with American Airlines, which I'm currently sitting at that with that position. It's expiring on 5/16, which is this Friday. So I'm trying to decide. It's currently still in the money. I believe it's a little bit over $11. So I'll probably look to roll it if I can make enough income. If not, I might actually let it get assigned, and then a week from Monday, I might sell a covered call on it and then go that route. I do notice with a lot of these positions that they produce even more with covered calls. So um, that's it for a decision. We'll kind of talk about that. We'll look at American Airlines for the setup that I'm looking to do. So the end of this video, I'll go through the setup and how I might, what it looks like as a cash secured put versus a covered call. And again, that'll be at the end of the video. I again rolled Fiverr. I just rolled Fiverr recently on May 8th, which I believe was Wednesday or Thursday. Today's the 11th, so I believe it was Thursday. So, um, and I made 153 the previous time when I rolled it in April, and then this time I made 151.34, which both of those were like a 23 or 26% return. So literally every month, like if we look at April, I made 330. I made 285, or pretty close. If you average those two out, it's 300. I made $466 in February, and then in January I made 361 for a total. If you take the original 10,000, it's 11,595. So, and then the required or assigned capital, I have required capital mainly because I also have where I purchase the long puts. But the actual assignment capital is how much capital I need if assignment occurs with both positions, which if we got a major dive in the market next week, they could both be assigned to me potentially the same week. So I would need 92.71.58 to handle both the Fiverr assignment and the American Airlines. So I'd end up with 400 shares of American Airlines and 200 shares of Fiverr. So each of these trades are real simplistic to do. You just either close and then open a new one, or you just roll. Of course, rolling is just closing your existing position and opening a new one, and in the process, bringing in enough cash to make it worth rolling. So now, if we look at it overall, what I really like to look at is this total premium. So I made 15.95, which is again just minus the 10,000. So the 11,595 minus the original opening balance. I earned 180 in interest. This is infidelity, so you earn a little bit of a better interest rate. Right now, it's right around 4%, just slightly above 4%. So the total income 1755, monthly average 351, and that doesn't even include. I only have one trade in May, so this would be even higher. It would be close to 400 when I do finally get make a trade with American Airlines either this week or next week. One of those weeks I'll definitely make a trade on it. So the required capital again is 64.71. So the monthly return on investment using the required capital is almost 5.5%, 5.43, which is pretty substantial. And then if you looked at it as a yearly return on investment, it'd be almost like 65%. Now the rule of 72 puts it meaning you could double it if you did this, a little bit over a year, a year and a month or two. And again, I did this during the April correction. Both American Airlines went pretty deep in the money, and so did Fiverr. Fiverr has actually recovered fairly nicely. I believe it may be $30 now, and I think American Airlines is 11 during the correction back in April. I think Fiverr got to 24, and I believe American Airlines got to like 10 or 9. Um, and then if I look at total capital, if I look at the 92.71 that I needed to be able to make the trades, that's like almost a 4%, so 3.79 on a monthly ROI. Now, if I did a yearly ROI, again, multiply that by 12, it's almost like 45%. And so the rule of 72, which if you're not familiar with the rule of 72, you just divide 72 by the return on investment to come up with how many years it would take you to double that account. So in this case, it would be 1.58. So it's pretty substantial. I've been really surprised how well I've been able to do with it. Um, Neither one of the, I mean, I like Fiverr. I would want to own Fiverr. I really don't have an interest in American Airlines. So one thing that's worked out well is I don't really care to own American Airlines. Fiverr, I'm kind of mixed on. I do like the company. I actually use them quite a bit, and they do have, I think their profitability is good. They have fairly good growth, so they are definitely a good company. And for small accounts, being again, I believe they're right around $30, which is a nice price for trading in small accounts. So some of the notes, testing how well the wheel strategy works in a small account. If you think about this, you just do one trade in 1 month, and that's like what you would get in a money market. So one trade would be doubling a money market. So those of you who are out there who have a money market earning 3%, you do one trade and you double that. If possible, try to do multiple trades during the same month. Now, one thing I've been doing literally only one trade a month, but at times I probably could have closed these. Not so much in April, but probably February or March. I could have potentially closed early and done more than one trade in the month. So something to kind of keep in mind. Definitely could not have done that in probably March and April. It can be more difficult to make a higher return due to limited resources, fewer trades. But I could also argue the reverse. The fact that it's a small account, only a few trades make a huge difference. It's really been surprising. Next, the stocks are holding up well with the correction. Again, neither one of these were assigned to me. American Airlines wasn't, HIMS was not. I believe HIMS also got hammered pretty hard. And Fins, I think it was Fins. I always get confused if it's Fins or Kins, which it also shot up. I kind of wish I had bought some shares. I think Kins is up to like 28 or 29. I could have made some pretty good returns. Um, and then other opportunities for other stocks. I have American Airlines in here again, but you could potentially do it with SoFi or Ford. I will talk about SoFi in a future video coming up probably later this week. Should I allow assignment with AAL, American Airlines, then sell a covered call? Or should I roll? You know, I can compare using bar charts. And I'll do that in the next later part of this video. Or should I close more aggressively for a higher return? And that's what I talked about before. There were times in January, February, I probably could have closed these positions at like 50 or 60% and potentially could have made, two trades versus the one, or over 2 or 3 months, maybe, you know, five trades versus three or something along those lines. So just something to consider. Now, I share this with my memberships. I share this um, with my members every time I post these trades. I go out to Patreon, I post it there, and then I copy it to Discord. I talk about why I made these trades. I also share if you don't have you don't have level two and you can't do spreads, that you can do these as cash secured puts. If you have a smaller account, you can use fewer contracts. So I go over a lot of that in my memberships. I am looking at increasing the cost or price on my membership. All my current members will be grandfathered in. I'm going to do that on June 1st. I'm also going to go away from the free membership where someone can try it for a week. I'll have like a discounted try it for a week, but if you want to, jump in before the end of the month, when I do make those price changes, take a look in the description. It may be worth your while. I'm trying to make my membership very affordable. Right now they're month to month, but I'm looking to potentially allow people to pay for a whole year at a discounted rate. So just wanted to mention that compared to a lot of other YouTubers, I'm not forcing you to join for 3 months, 6 months. You could try it for a month and leave. Some people do, some people come back. So I encourage you, take a few minutes and take a look. So that being said, let's jump into what the trade setup looks like, and we'll also look at bar charts. Okay, now I've opened up bar charts with American Airlines. I like to use their option chain. I like how they have IV and Delta. I also like it how they have it color coded, and I just prefer it over a lot of the other option chains, especially Seeking Alpha. I prefer Bar Chart's option chain. I also like their interactive chart a lot. If you've not worked with it before, here's the Bollinger Band. You can see they're kind of towards the bottom of the Bollinger Band. If you come down, you can see RSI. RSI looks good too. The green over yellow means they're building up a lot of momentum, and you're seeing that with the stock increase. So if we look at the options chain, what I want to look at here is go out to 620 and just see what the covered calls look like. If I end up getting assigned at 12, it looks like I could sell. And was it a down day? It was an up day. So I could sell the covered calls right around 42, 43, which isn't bad. You know, if they're up again, it may be a little bit higher, but that's still, I'm about 170, I guess, between 170, 180. Now, if I look at the trade and I look at the setup, so if I look to roll on today's numbers, which tomorrow could be completely different. I used to provide this kind of stuff over the weekend, then I realized it didn't make sense because Monday was completely different. These numbers would look a lot different. But based on this, I'm showing that I could roll. So what is a roll? This is a roll. You're just closing one position. So I'm buying to close. Actually, I need to sell to close one of these. So buy to close, sell to close. right here. So I'm buying back the put that I sold, and then I'm selling the $9 put. So potentially I could sell the long put and make $1 to $3. Um, but I'm paying $98 to potentially close it. But then if I roll it out to 620, I'm earning another $1.24, but then I'm paying $1 or 16 cents. And the net of that is between 11 cents per contract to 23. So I could make 68. So the question is, is that something I should do? Looking at today's numbers, there's a big argument for one, either closing it, but even closing it's kind of pricey, but letting it get assigned by the end of the week, I may make a different choice depending on what happens in the markets. If we have a really good week in the market and American Airlines, goes up to 12 to 13, well, then the position may expire. But if it gets assigned to me, I might try to make $1 or $2. Of course, I got to multiply this by 4. So say I could get it $2. I could maybe make $8 by the end of the week. Let it get assigned to me. I'd own 400 shares, but then I could come over here, like where we were just looking at, and I could sell this covered call potentially at 12. Um, Again, because I've picked up a bunch of premium in other months. So I would again be picking up around $160, $170. I could go out a little bit more. But again, this is American Airlines. In my mind, they're going to continue, the market's going to continue to take them sideways. I can't imagine them, shooting way up. I could be wrong. I mean, if we go back to the interactive chart, we can kind of take a look. And if I go, well, this is all the way, I believe this is 2 years. So you see, it's been kind of sideways. It shot way down, came back up, shot way down, came back up. So it kind of moves in that. So it could go up quite a bit. So if it does that this week, it may come out of the money. I can let it expire, then I can do another vertical put credit spread. So we can take these two out and we can see what it would look like to do a vertical put credit spread at the same values. So, that might be the best way to go if the stock shoots up, or if I can close it for dirt cheap at the end of the week, then that might make sense. But either way, I'm less worried about it because if it gets assigned to me, I can do okay with it. If it goes up to around 12 and expires outside the money, then I can open up a new put. The numbers probably wouldn't be as good as they are here. Um, but this looks like it would be potentially a better way to go than, again, coming back here to the bar charts and then looking at the 620. Um, so I can kind of just let it happen, just see how the week goes. Let me know what you think. What would you do in this instance? Would you do something different than what I'm looking at? If it expires outside the money and doesn't get assigned, then I'm probably going to do another vertical put credit spread. If it gets assigned to me, then I'm going to do a covered call. Either way, it looks like I do a little bit better with a new vertical put credit spread, or cash secured put. Again, I just bought the long puts because they were dirt cheap. I think I paid like $2 or $3 per contract, and if I can do that, I typically do it because if the market tanks, then those long puts become worth a lot, and you can end up selling them. So if the market tanks this week and it goes down to $8 or $9, then I probably could sell each of those long puts for maybe 15 or 20 cents or something along those lines. So yeah, leave a comment. Let me know what you think. What would you do something different? Am I missing something? But I kind of wanted to give you guys an idea of what I do. So this week at some point, I'll keep an eye on the stock, depending on what happens with the stock. If it trends up, then I'll do, I might lean to do nothing. Or in most cases, I might not really do anything unless there's a huge move, especially down. Then I might I might go ahead and see if I can roll and pick up a little more premium. So that's what I wanted to share with you guys today. And as always, thank you for taking the time to watch the video.